Welcome back to our business accounting sessions, and in lesson 1 we will quickly look at the differences between financial accounting and management accounting. You will all remember that during the first semester we were mainly concerned with financial accounting, while in semester 2 we will look at management accounting. The agenda for this lesson number 1, is to look at the branches of accounting, the users of accounting information, what is meant or understood by financial accounting, then management accounting, and lastly, I will show you the differences in a diagram, the differences between financial accounting and management accounting. Now, here you can see that accounting is a tree with different branches. And you will remember we've learned in the first semester that you have different branches of accounting, and there were about 6. But for now, we want to focus on the primary one. So we have financial accounting, what we did last semester, and this semester then management accounting. So although you have many branches of accounting, these 2 are the primary ones. Now let's quickly look at the users of accounting information. This is also something that we did last semester. We look at internal users and we look at external users. When I'm saying internal and external, I mean that the internal users are inside the business, while the external ones are outside the business. So now if you look at employees, they are working for the business, they are part of the operations of the business, so they are internal. The same with management, they are part of the operations, they are internal. But if we look at the government, and here I'm talking about NAMRA, the revenue agencies, maybe some of the other ministries, so they are external because they don't have a say in the day-to-day activities. They are not busy with the operational side of the business. They are only outsiders, but they are still a stakeholder and they still use our information. Then we have suppliers or creditors. These are the people that we buy from. Now, why are they concerned with our information? They would like to see whether our business can repay their debt. So this is why they are concerned with accounting information. Then banks, people borrow from the bank, so the bank are concerned whether you will be able to repay the loan. So this is then users of accounting information, internal, the ones in the company, external, the ones outside the business. Now let's see, why do we need accounting information? We need accounting information to see what happened in the past. You will remember financial accounting, we wrote up what already happened. And then, how did management respond to the business aspects? This is also that you will see in the accounting information. Then we need accounting information to plan and to budget. And this is now where cost accounting or management accounting come in. And then when you plan and budget, you are making decisions. So basically decision making. So what happened in the past is mainly your financial accounting. How did management respond to that? Basically financial accounting, while these last 2 has to do with management accounting. Now sometimes it can be that what happened in the past may guide our decision making and may guide our planning. So financial accounting, just to emphasize, past, planning, budgeting, decision is for the future. This is just a brief summary of financial accounting. The reports are based on the entire business. You don't have specific reports for specific departments. The reports, your financial statements, are based on the entire business. And you will remember that we have a set of financial statements. Now that set of financial statements started with your statement of profit and loss. Then we did the statement of financial position. Those are the only two that we did last semester. But you also have a cash flow statement, a notes to the financial statements, and then also an explanation of the policies used in the financial statement, and then also the equity statement. Financial accounting looks at the past. It's transactions that already took place. You will remember the accounting cycle. There must first be a transaction. So it uses historical data or information. So in other words, it has a historical or a past perspective because it shows you what already happened. Now, mostly your users for financial accounting information will be external. And also, you will remember that there were only one way to do a statement of profit and loss, and there were only one way to do a statement of financial position. You could not choose how to do that because you had to adhere to the international financial reporting standards. So wherever you are in the world, you will have an income statement and a balance sheet that looks similar so that people can understand. Now, management accounting, this is now this semester. It's new to you, but what are the differences? While financial accounting dealt with the whole business, in management accounting, you will have reports concerning specific segments or departments. They only use historical data when it's useful. So they don't always use historical data, only when that data appears to be useful. Now, management accounting is concerned with decision making, with planning and control. So in other words, it's future orientated. And then our users are mostly internal because it's management that must do the planning. And then while in financial accounting we had a specific format, in management accounting we don't have a specific format. This diagram only shows you the differences once again. We can start with the users. Financial accounting mostly external, management accounting mostly for managers, so it's internal. Time focus. Financial accounting is in the past, historical. Management accounting, future. Then the qualities. Financial accounting, you want to verify the information. That's your emphasis. In management accounting, your emphasis is on relevance for planning and control. So this is why I said you only use historical data when it's relevant. All right. Precision on financial accounting, timeliness on management accounting. If these reports are not in time, it won't affect your decision making. Primary focus is on the whole organization, while management accounting only on certain departments. Requirements, you must, for GAAP, this is now talking about the US, but financial accounting, you must adhere to IFRS. So there's a specific prescribed format, while for management accounting, there's no prescribed format. Now, students, these are the differences between financial and management accounting.